In this video, we're going to debunk 5 myths about investing in crowdlending. If you're a beginner investor, I recommend watching this video before you start investing in P2P lending. And if you're already an advanced investor, I also recommend watching until the end, because some of these myths might surprise you. Before we begin, I'd like to invite you to subscribe to this channel so you don't miss more interesting videos about crowdlending. Myth 1. Investing in regulated platforms eliminates risk. Some people believe that if they invest in platforms that are regulated, their investment is risk-free. This is not true. There are several risks when investing in crowdlending, not just the risk of the platform, such as it failing, going bankrupt, or being a scam, but also the risk of the loan originator, who may have financial problems and be unable to fulfill their obligations, and the borrower, who may not repay the money. A regulated platform means that it complies with certain regulations, has a license in a specific country or at the European level, and is under supervision. This ensures that the platform is legitimate and won't run off with our money, but it doesn't eliminate investment risk. In some cases, regulated platforms have a guarantee fund of up to 20,000 euros for investors. But this fund only covers the money we have in the platform's accounts, not the money invested. So even if we invest in regulated platforms, our investment still carries risk. Myth 2. The buyback guarantee eliminates the possibility of losing money. Another myth is that if I invest with a buyback guarantee, I won't lose my money. This is also not true. The buyback guarantee covers the borrower's risk. If the borrower is late with payments or doesn't repay the loan originator repurchases the loan and pays us the principal, and in most cases, the interest accrued up to that point. However, if the loan originator has financial problems or goes bankrupt and cannot fulfill the buyback guarantee, we could lose our money. This has happened in some cases. The buyback guarantee is not a 100% guarantee, and the same applies to mortgage-backed loans. If the value of the property is less than the loan, there won't be enough money to pay the investors. Additionally, this process can take time. Myth 3. The more I diversify, the safer my investment. While diversification is very important in investments, especially in crowdlending, it doesn't mean that more diversification always makes the investment safer. It's important to diversify into good platforms, good loan originators, and good loans. If we diversify without criteria into many platforms or loans, our investment may not be as safe. Not all platforms, originators, or loans are good. Myth 4. If I invest in short-term loans, my money will be available at the end of the term. Investing in a short-term loan, like 1 month, doesn't guarantee that the money will be available at the end of that term. If the borrower is late, the buyback guarantee may activate after 60 days, which could extend the total investment time to 90 days or more. Additionally, if the loan originator can't fulfill the buyback guarantee, our investment could be delayed even further. This also applies to mortgage-backed loans. If not paid on time, executing the mortgage guarantee can take months or even years, depending on the country. Myth 5. If a loan has a 13% return, I will get that 13% on my investment. Just because a loan has a 13% return doesn't mean we will earn that exact percentage. Our money won't always be invested every single day of the year. Between the time one loan ends and the money is reinvested in another, there may be days when the money isn't earning anything, which reduces the return. Additionally, most platforms offer loans with varying interest rates, so it's common to get a slightly lower return than the advertised rate. It's also important to remember that the returns expressed are annual. For example, a 1-month loan with a 13% annual return doesn't mean we'll earn 13% in that month. It means we'd earn 13% over 12 months. For a 1-month loan, we would earn the corresponding portion. Now that we've analyzed these 5 myths, let me know in the comments if there was any myth or concept that you previously understood differently before watching this video. Share your experience with the community. If you enjoyed the video, please give it a like and subscribe to the channel so you don't miss out on more interesting content about investments. Your support helps us grow and continue creating valuable content. Thank you for watching, and see you next time.